Hello everyone and welcome back to my channel. In our previous lessons, we learned what the US30 is and why the US30 moves. Now in this video, we are going to discuss one of the most important concepts in trading, which is market structure. Before you think about buying or selling, you need to understand one simple question, which is which direction is the market going? Because that's exactly what market structures help us determine the direction which the market is moving. Now, market structure is simply the way price moves over time. Every market moves in one of three directions: up, down, or sideways. So in this video, I'm going to mention just few details about the sideways market, but our major focus is going to be on the upward movement and the downward movement. Let's start with the uptrend. So, in simple terms, an uptrend simply means buyers are in control, and this is when price makes higher highs and higher lows. Every time the market pulls back, buyers step in and push the price higher, higher, and higher. Now, as a trader, your main focus during an uptrend should be looking for opportunities rather than trying to sell against the trend. So I'm going to be giving a brief example. So as you can see, price keeps making highs and lows. Now don't forget, we are still speaking about the uptrend. So speaking about the uptrend, this is an high. Oh, excuse me. That's an high. This is an high. Also, this is an high. So we have this series of lows here. And series of, okay, let me do it this way. So okay, I'm going to duplicate most of these and also save our time. So we have the eyes here, the eyes, the eyes. I think I'm going to duplicate this one also. So we have the eyes. So the higher lows. So I don't want the video to be very long. So have it in mind. The red lines are for higher lows, and the abbreviation for that will be the HL. So the higher highs HH, then higher lows HL. Let me put one single text there. That's higher lows. Let me duplicate that. Higher lows, higher lows. So it is pretty clear. We still have them here. Higher highs. Yeah, I'll just so in this video, you're really going to have to train your eyes. This is also a low. This is a low. This side is a low. Yeah, yeah. This one. So this is just a simple example of higher highs and higher lows. So the next we're going to be speaking about is the downtrend. A downtrend is the opposite, and in a simple definition, this is when the sellers are in control. And during this particular kind of market, we keep meeting lower highs and lower lows. We keep meeting lower highs and lower lows, which shows that sellers are in control. Every rally is met with selling pressure and price continues to make new lows. So during a downtrend, traders generally look for selling opportunities instead of buying. So a simple example of a downtrend is this. So let me go to the 1 hour. So just the exact opposite of the uptrend. Price will keep making lower highs and lower lows. Highs and lower low. Also this also is one. Lower. So that is what this is. Yeah. I think it's better this way. So I have it in mind this way. Lower highs and lower lows. Now, as we move forward, you get to really have clear understanding about market structure when it comes to US30. I want you to understand something. Professional traders don't trade based on emotions, and this is what separates the pros from the newbies. Every beginner, here's one thing they do wrong. They enter trades because they see one large candle or because they fear missing out. While the pros, they trade based on structure. Before entering any trade, you're supposed to ask yourself who is in control of the market? Is it the buyers or the sellers? Who is in control? Because these questions can keep you from taking low probability trades. Another important concept is the break of structure, often called the BOS. So this video is not dedicated for that. But briefly, let me explain. A break of structure happens when price breaks a significant swing high or a swing low. Now, this is an example of a swing low. This right here, this is a swing low. This is a swing low. Pardon me. This is a swing low. This is a swing high. This is a swing high. This also is a swing high. So, in order not to take much time on that, in the videos to come, you're going to have full understanding about break of structure. So now, I want you to really understand that the trend is your guide, not a guarantee. Even strong trends experience pullbacks, and no setup wins every time. That's why risk management is just as important as market analysis. Now, at the end of this video, this is an assignment I want to give to you in this stage to make sure you're following what I've been trying to explain to you and know if you have a perfect understanding of it. And now here's your homework, and it is a very, very simple one. Open your chart, zoom out, and identify whether the US30 is in an uptrend, a downtrend. Draw the swing highs and swing lows and practice recognizing the market structure before looking for any trade. So, in our next lesson, we are going to discuss about liquidity. In our next lesson, we're going to be discussing about liquidity and why institutions move price. You see, liquidity is key. For every move you're seeing, price is reacting to liquidity. For every movement, every break, every invalidated highs and lows, price targets liquidity. Price targets liquidity. So in our next video, we are going to be speaking about liquidity. And that's the end for this video. Thank you for watching. If you found this lesson valuable, make sure you follow my channel, and I'll see you in the next class. Bye for now.